S oil seeing a huge crash today as the future contracts for oil expires, and Bitcoin not reacting just yet to this major sell-off in oil. However, there's a high chance that we may see a reaction with Bitcoin as we are now testing this 50-day moving average. As you can see on this chart, we actually went below this 50-day moving average, and there's a chart that I'm gonna actually go over with you guys today that topped out and saw an all-time high today, and it has not seen an all-time high since October 28th of 2018, which is right here before the major crash down. And so we're going to be going over that, and I'm also going to be going into the U.S. immigration ban. Of course, if you guys saw Donald Trump's tweet today, he is now banning all immigration and implementing that executive order, which is a huge deal when it comes to the global economic state. And so we're going to see a big reaction to this as future markets open. And interestingly enough, if we actually go into this chart here with oil, you can see we saw a negative price for oil today. A lot of people are wondering what happened. I'm not going to go too deep into oil, but just realize that the futures contract ended today, and based on how oil is traded in its spot price, there's a lot of influence with the future contracts, and people had to make a decision on whether or not they wanted to take delivery of their oil or get rid of their contracts. And of course, that led to a negative price. But now we're back at around $21, and that's the June contract for oil. But outside of that, when we look at what's happening with the Dow Jones, we actually predicted that this was possibly going to be the top here. And you can see we saw some major resistance and sell-off at that 50-day moving average. And it looks as if we are going to start breaking down from this bear flag that was formed here from the initial bottom here around 17,900. And now you can see we went all the way up to around 24,000, and we could not break that resistance. And so we're seeing this potential start of a collapse in the equity markets, and that's going to really affect Bitcoin in a lot of ways, as Bitcoin has been correlating with equity markets as of recent. So first and foremost, before we get into all of these headlines, and I do have that chart that I want to show you guys that saw an all-time high today, and the last time it saw that was in October of 2018 before the major crash down. So it's a very interesting chart. I do want to do a technical analysis as always to show you guys what's happening right now. So first and foremost, understand that with Bitcoin right now, when we look at this formation and this bear flag, it's actually a positive thing, in my opinion, for those of you looking to get better entries on Bitcoin, that we have broken this support, as you can see here. And not only did we break that support, we broke that 50-day moving average. So it's not significant anymore as a support level because it's already broke. And at this point, we know that price action is very weak at this level. And when we zoom in to a 15-minute chart, you can see this support level, this ascending support, was the last support level in this bearish flag. It's now starting to show a lot of weakness with price action, and we're potentially going to fall through this level. And so this to me shows a lot of bearish pressure. And when we look at volume, we have yet to see a lot of volume come in, but we're obviously seeing sellers in the market, which is important to know because now this falling pattern is not significant, and we have to look at what pattern is now going to be forming for Bitcoin. And so I went ahead and drew out this parallel channel. This is an ascending channel that's formed so far. And now this is what I'm watching in order for us to determine whether we're going to see a big dump in Bitcoin or not. And we're really going to have to watch this level here right around that $6,500 area. As you can see, this would be a break in this ascending channel, which is also a bearish flag as it's coming down from a downtrend. But most importantly, you have to realize that all of this volume is all in this zone. And if we break that $6,500 level, we've got this open area of volume that could really initiate a lot of sell pressure for Bitcoin, taking it down possibly to that 200-week moving average, as we've been targeting for quite some time now. And so you can see that 200-week moving average is right around that $5,700 level here, and it's depicted in this green horizontal line. And what's interesting is when you look at past market structure, interestingly enough, we're seeing something that isn't too much of a surprise. And what I mean by that is when we look at this big drop here, and then we saw this pump above 10,000 out of nowhere before seeing the final bottom around 6,400 in December of 2019, you can see we actually saw a big inflow of buy pressure and volume at this area, and it still wasn't the bottom for Bitcoin. And you can see right here, we have this similar area of high buy pressure and high volume. And interestingly enough, we saw price action after a big dump, like we saw here, where we saw a big dump. We saw price action go to the upside, but then it finally came down, and this ended up being the bottom until we saw 10,000 again. And interestingly enough, we're in this consolidation zone that we were previously in. But if we were to follow the same market structure, as you guys know, it's so important when it comes to technical analysis, there's a high potential this breaks down and we see that 200-week moving average around 5,700 and potentially even retesting this $3,900 ascending support level before seeing the final, I would call this the final low for Bitcoin before we see a major breakout, is the halving or the halvening. You guys make fun of me for saying that differently. It's coming up in less than 20 days. And so realize that, yes, we have all this economic turmoil. We're in a quarantine and a lockdown right now. But at the end of the day, the Bitcoin halving is not going to be delayed, right? So if you guys are excited about the supply of Bitcoin getting cut in half and no central authority printing Bitcoin at their disposal, then I'd love to hear from you guys. Maybe like the video or comment your thoughts there. But I'm excited, and I'm glad that it's not something that can be delayed because of a pandemic. It's something that is fundamentally built into Bitcoin's code, and it allows Bitcoin to have the deflationary nature that it has. And so that's very interesting to me. And so I think that just like we saw here, we saw a peak in buy volume, but it ended up not being the bottom. This could have had the same effect where we saw this peak in buy volume, we saw the pressure up, but then we finally come down and we ease ourselves at the bottom, because as we know in the past, once right here, Bitcoin bottomed out, twice right here, Bitcoin bottomed out. It likes to stay at the bottom. It doesn't like to just come in and wick at the bottom. And so I think that with all of the pressure that we're seeing with equity markets, especially after the US immigration ban that was announced tonight, and futures market went from being up 100 points in the Dow to negative 200 points, I think that all of these potential areas of bad news that could infiltrate the stock market is going to potentially push Bitcoin down to a point where people are going to be like, man, I don't know if I want to put more liquidity into Bitcoin, and that's going to be the bottom, right? It's going to be the same thing with equity markets. People are going to say, man, I don't know about these stocks anymore. They're just going to continue down. And so, we look at the gold chart here, and you can see we're starting to head down. We're not seeing as much pressure to the upside as we saw previously, but this could change really quick for gold. But realize that these commodities are very sensitive, like we saw with US oil, seeing negative prices. So let's say Africa comes out and says, oh, we're dropping gold prices. We just never know with these commodities at the end of the day. And Bitcoin, in my opinion, is the most structurally sound investment and preservation of wealth due to its nature of deflation and how that's fundamentally built into its code. Whether an asteroid full of gold comes and hits the earth and gold plummets, it's not going to happen for Bitcoin, right? It's fundamentally built into its code today. And the last time it saw that was before Bitcoin saw a major push to the downside and ended up bottoming out around $3,000 in 2018. But let's look at the stock market really quick, because this does matter, and I want to give you guys my opinion on the Dow Jones Industrial and what's happening, because a lot to what happened in 1929. And one of your comments, by the way, on YouTube, it said, oh, don't compare 1929 to 2020. There's so many differences. And I understand there's a lot of differences fundamentally, but at the end of the day, when it comes to a chart, technical analysis and markets are all emotional. And so the emotions are the same. In the Great Depression, there was so much uncertainty. The same way there's so much uncertainty right now that the charts are going to act the same. And interestingly enough, you can see here, we saw a 50% Fibonacci correction after the major drop in 1929, and we ended up going 2.4% above that 50% correction before being the top and then seeing further downside in the 1929 correction. And you can see here, this was also the area at 24,000 for the Dow that we saw major resistance, and we've finally broken down from that major bearish flag that I just showed you guys on this chart. And so realize that there's a high likelihood that we could have topped already in the equity markets. And on top of that, realize that the fundamentals are very similar when it comes to unemployment rate and the quantitative easing measures that are being put forth by the federal government. So unemployment in 1929 was at a record low, just like we entered 2020. But then by 1934, we reached a 25% plus unemployment rate. And the same thing that could potentially happen here, where we've already seen over 20 million jobless claims in the last 4 weeks, which could translate into a 10 to 20% unemployment rate just off the bat. Disney today announced another 100,000 layoffs, right? So realize that the fundamentals are very similar, the technicals are very similar, and this could have been the top here before seeing further downside and another leg down. And so realize that when it comes to Bitcoin, do I expect it to capitulate like oil did today? No, because remember what happened. Bitcoin, it bottomed out on March 4th while the equity markets bottomed out on March 24th. And so Bitcoin ended up decoupling from the S&P 500 when the equity markets continued its downside. I expect the same thing to happen right now for Bitcoin. We know there's demand at that $3,900, that $4,900 level, and especially that 200-week moving average. And so from my perspective, if we start to see a further decline in the equity markets that ends up domino affecting into Bitcoin, then there's a high likelihood that Bitcoin will drop. But we know there's demand at a certain area that it doesn't matter if there's a correlation with equity markets or not, it's going to decouple itself. So realize that there's a high likelihood that we see continued downside in the equity markets. And what I'm really watching here is this 23,000 Dow. And what I mean by that is you can see this acted and printed itself as a resistance, and it also printed itself as a support. And you can see that was what initially allowed us to stay up here for the last 2 weeks. And so that to me is a significant level of support now. And this ascending support line is not significant anymore because it has broke. And so realize that at 23,000 Dow for me is going to be the point of no return before we see a leg down. And if we're able to maintain above, maybe retest 24,000, that's a high likelihood we could possibly go sideways. Remember, we want to take a step back and be the umpire here. We don't want to be biased on the bullish side or the bearish side, but realize that there's a high likelihood that if 23,000 breaks, that things could start looking very bad for the equity markets. Grant Odell on YouTube says, half MC less coins. Virus says, what happened? Mobius says, Naeem, you the man. What happened in what? Oil? Oil is a very, very complex story. I don't want to get too far into it, but realize that the futures contract in May were ending today. And at the end of the day, people have to make a decision that own those future contracts, whether they want to take delivery of the oil barrels or sell their contracts. The problem is there was an oversupply and nobody was willing to buy those contracts out. And so there was such a high supply of oil that somebody had to take storage of the oil. And at the end of the day, everyone was full and didn't want to take storage of it. So it got to the point where people were saying, okay, well, I'll actually pay you to take storage of this oil. It's not that the oil as a commodity is worth negative $37 or $0. No, it's the fact that today there was a future contract that ended and nobody was willing to buy that contract. They were actually willing to take storage if they were paid to take storage. And so those contracts had to be sold in some fashion because people were already buying those contracts. And so the only way out was to see who was willing to take storage of the oil at $37. So for those that are physically buying those barrels today from those future contracts, well, really you're buying a futures contract that ended today that now obligates you to take delivery and physical delivery of the oil barrels. Well, you have to have a place to store it. And yeah, that could have been an arbitrage opportunity where we knew the June contract was over $20 and that it was going to rise back up to $20. I even put it on my Discord that don't be surprised when oil shoots up over 100% tomorrow when it's over $20 because the June contract's already trading at that price. But what happened was something that was on paper looking really bad for the markets that in reality isn't kind of true, where oil barrels are not negative price or free. That's why you're still going to pay for oil and gas at your local gas station. But at the end of the day, the way that economics are, that's what led to a $0 oil. So, I mean, I've never seen a cryptocurrency go negative, right? So at the end of the day, I'm more confident in crypto and even in these altcoins than I am with US oil at this point. But not really. I mean, we understand what happened with oil. I hope you guys did. If not, just search some articles about it. I'm sure it'll be pretty easy to understand. I don't want to go too far into that, but I do want to go over confirmed transactions per day. We're seeing over 300,000 consistently. Very good fundamentally for Bitcoin. Unfortunately, with hash rate, it does look like we're high up right now, but if you guys saw our video on Friday, these are delayed metrics. This is only showing the metrics up to April 19th. But on April 20th, we saw a big drop in hash rate below 110,000. That doesn't seem to be reflecting on this chart. And so we made a lower low and it stopped this uptrend. And so we might see hash rate over the next few days start to come down. And so we'll be tracking that on our video and our live stream on Wednesday. By the way, if you guys appreciate this content, hit that like button, smash it. It helps our channel. And I'm going to wrap this up. I don't want to take too much of your Monday night. It's pretty late, but there's a chart here that I want to show you guys that in my opinion is extremely significant because we just saw an all-time high today and we have not seen this chart see an all-time high since October 28th of 2018. And that's the Bitcoin spent outputs with a lifespan of 7 to 10 years. And this is the hourly chart. And you can see here, we saw a huge increase in the spent outputs. And interestingly enough, when you look at a chart and you look at what happened in October 18th, when we saw that peak out, you can see here, this right here, October 18th in this area. Sorry, this delayed and it caused me to draw this wrong. But you can see here, this area here, sorry, this is not working out. It's because I have a second screen and it has a delay from my mouse. All right, so you can see here, October 28th, 2018, right down here, we saw this major push down in Bitcoin's price afterwards before we ended up bottoming out from that $20,000 rally that we initially all were a part of, or maybe you weren't. And if you weren't, then welcome to the cryptocurrency world. But if you guys were on our channel, you know we were streaming at this time. And so interestingly enough, we saw this chart also see a new all-time high. And so to me, it's going to be very interesting over the next few weeks to see what happens with equity markets after this reaction with gold, after this new U.S. immigration ban that was put forth today as an executive order. And then, of course, on top of that, realizing that earnings are going to be coming out for companies over the next 3 weeks. And a lot of people love to buy the hype and sell the news. And this could have been the last chance a lot of other hedge fund managers like Ray Dalio are also expecting. And so who knows? I think that the possibility of the equity markets being already at their top for their second leg up is in, where we have that known support level that's held itself for a very long time. And so I'd love to hear you guys' thoughts about what you think could potentially happen when it comes to Bitcoin. Other than that, I think that, you know, it's going to be interesting to see what happens over the next few days. Future markets look like they're going to open in the red, but they're not too bad right now. You can see the Dow just over 100 points to the downside right now. So it's going to be interesting to see where that takes us. The crypto fear and greed index, still in extreme fear. We're kind of just mellowing out below that 20 when it comes to the fear and greed index. So a lot of fear still in the markets. And then, of course, looking at this chart, you can see we saw an all-time high here in the spent outputs. And the last time that happened, Bitcoin plummeted down and it found its bottom. And so it's going to be interesting to see what happens. You know, a lot of these markets are kind of following the same shape and market structure, which is they saw a huge push down and they're all inside of this bull or a bear flag. And so it's just a matter of time before we see whether or not this is going to come down to the downside, as we saw here with the Dow Jones Industrial in 1929, where we saw this major push down. We saw 37% correction back up, and then we saw 90% decline from there. And so this could have potentially been the same market structure that we're seeing right now, where we saw this initial bottom. People think things are good, and then things get really bad. And so I'd love to hear you guys' thoughts. Outside of that, I will see you guys on our Discord. I don't want to take too much of your time. It's Monday. We have the whole week left. And Brendan says, great explanation. The reason I look forward to all your live streams. Thank you. Grant says, I've probably got room in my basement for some barrels. That's funny. Well, you're going to need a lot of barrels if you want to make a significant return on that one. Brendan says, just say having. All right, fine. I'll say it right. My test says, what impact will it have on buy price? I don't know what you mean by what buy price for which asset. Marco says, was dead asleep, but my Naeem alarm went off. Time to get up. Yeah, make sure you guys turn on your notifications on your YouTube if you guys haven't already. But yeah, we're going to see what happens here. I think things have topped out. They might have not. I mean, at the end of the day, if we didn't see the type of quantitative easing that we're seeing right now by the Feds, in all reality, this is how every chart would look right now in the equity markets, in my opinion. Every chart, I wouldn't say it would go to negative, but at the end of the day, they would be down and they would see a continued downtrend. But we're seeing quantitative easing. We're seeing the Feds buy up corporate bonds. We're seeing them buy junk bonds. We're seeing them inject liquidity in some parts of this market, bailing out a lot of these companies. And at the end of the day, we can't do anything about it at this point. We don't know the inflationary inflationary repercussions yet. So far, we're seeing deflation. If you guys are following the inflation, maybe I'll cover that on Wednesday. But in 2008, we saw deflation as well, initially for the US dollar, but in the long term, it does affect the US dollar. And so it's going to be interesting to see where things head. But other than that, if you guys have no other questions, I will wrap up and I will see you guys on the Discord. I hope you guys are staying safe in quarantine and in lockdown. Just remember, our duty right now is to spread the information that we have on what's happening in the equity markets that isn't on the news, that isn't on a headline. It's the truth. And the truth is, at the end of the day, people need to preserve their wealth right now because there's such an uncertainty with what's happening. And people need to learn how to create income from their home, from their computer, from their phone. And in my opinion, the best way to do that is to track financial markets and trade them. Of course, you have to learn how to do that because 90% of traders, they don't start the right way and they end up detrimenting their portfolios. But at the end of the day, if you know what you're doing, then things could be very profitable for you. And so I hope you guys are staying safe. And outside of that, I think we've covered everything. And I will see you guys on the Discord. Snipers out.